The last market report we did for November showed that while the usual trends are still continuing, those trends are declining in scale. These trends are a persisting seller's market that is steadily cooling, increasing inventory month to month, and contract activity that continues to fall. Combine all these factors and you get a leveling of the playing field between buyers and sellers. Will the seller's market continue to soften as fewer buyers make their presence known? Will inventory increase at an even greater rate? Stay tuned for December's market report. Quick disclaimer, there are other agents in Las Vegas doing market reports. You might see different stats in the categories discussed in this video. Agents across Las Vegas have different sources and those sources might have different data. For transparency's sake, I will link all the sources I have used personally to create this video market report in the description below. First up is the median sales price. December clocked in at $420,000, which is the same as November. Year over year, the increase has been marked at $60,000. In November's market report, we observed that the gains in the sales price had been getting smaller, but this is the first month where the sales price did not change. This is the first month that has halted consecutive equity gains, and now the question is, where does the market go from here? Now we go to inventory in the Las Vegas Valley. December shows up at 9,212 units, an increase from 8,857 units in November. December of 2021 displayed 6,430 units being available, clocking in a gain of 2,782 more units for sale. This is the third time we have seen an yearly inventory difference in the thousands. This really showcases how the landscape of the market has truly changed. We now cover pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. December sits at 36,736 units being under contract, marking a decrease of 1,467 fewer units being under contract when compared to November. December of 2021 had 52,092 units under contract, which marks a decrease of 15,356 fewer buyers getting their offers accepted. We go from pending to the final stage of an escrow, which is closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. December clocks in at 38,431 units closing, marking a decrease of 2,180 units when compared to November. December of 2021 sat at 52,412 closed units, showing a decrease of 13,981 fewer units closing year over year. We now go to our final stat, which is median days on market, or in other words, how long it takes for a listing to go live on the market to an accepted offer. December sits at 12 days on market, which is 1 day more than November. Annual gains show a decline where it took 9 median days to sell in December of 2021. While 12 days is not bad for the sale of a property, the days on market are continuing to increase, which is something we need to take note of. Alright, I'm going to cover the pros and cons as it relates to the buyer, the seller, and then list the trends that everybody should keep an eye on in terms of market health. For any prospective sellers, here are the things you should take note of. A lot of things in this report will sound a bit different since we have one important development. However, some things will sound the same, with the only difference being if the trend is getting bigger or smaller. With that being said, the seller's market is showing a pivotal point in its development. The strengths of this market are that inventory continues to be on the side of healthy demand, and inventory still goes under contract at fair market value relatively quickly. If the prospective seller wants the best results possible, listing at fair market value yields the best chance at getting multiple offers. However, the weak points of the seller's market have grown in December. While inventory is still low relative to demand, monthly inventory is steadily increasing, with a rate of about 300 units or so. This gives buyers more options and reduces the overall traffic one listing will get on the market. While inventory steadily increases, contract activity is worsening with each passing month. The sizes of the contract activity decreases are getting a bit smaller, but the fact remains that it is still dropping month to month. Now to cite our most recent development, median sales prices have stopped appreciating. November's month-to-month increase was $2,000 a notable deviation from the usual $5,000 increase common in 2022, but now it has stagnated. The biggest question going forward for the sales prices is whether they will continue to remain the same or if they will begin to decrease in equity. When you combine inventory increases, the current decreases in contract activity, the buyer pool shrinking, and a stagnating of home prices, you get a considerable cooling of the seller's market. With the cooling of the seller's market, prospective sellers should expect less overall leverage when negotiating offer terms with qualified prospective buyers. Secondly, let's cover the pros and cons for prospective buyers. With the most recent inflation numbers, December showed an inflation percentage of 6.5%, which is a marked improvement from June's high of 9.1%. This has resulted in mortgage rates being lower across the board. Rates are getting lower week by week so far, and the number of eligible buyers may shrink or may grow based on the fluctuating nature of interest rates, since they may continue to drop or maybe increase. While inflation has fallen by 2.6%, inflation still remains elevated. One would consider inflation elevated still due to the fact that the Federal Reserve has increased rates in its December meeting. Secondly, the Fed has voiced intentions to continue smaller rate hikes for their meetings in the near future. This could result in mortgage rates and employment numbers being adversely affected, both of which can damage this most recent buyer affordability rally. The question isn't if, but when the Federal Reserve will stop its rate hikes. There can be a few pieces of positive perspectives during this current market for buyers in the hunt. Inventory continues to increase steadily month to month, which means they have more options to look at. While inflation figures are still elevated, the decreases that have been occurring in the last few months are getting bigger, and they have been consecutively decreasing for the last 6 months. While the Fed has voiced the sentiment of continued rate hikes, they have said they are entertaining the idea of 25 basis point increases instead of the more usual 50 point increases. Now, what are the trends and patterns we should all keep a close eye on? Continue to keep an eye on inflation figures as each month passes and observe the Federal Reserve's actions. The justification for the Fed's future rate hikes is that they want to continue lowering inflation and don't want to stop prematurely. If inflation keeps being elevated, the Federal Reserve will continue its rate hike trajectory. As interest rates rise, the possibility exists where home buying affordability takes more damage, ending the current rally of affordability. As fewer people become eligible to buy, the gap between supply and demand will shrink, cooling the seller's market even further. With future rate hikes, the employment market will sustain damage, which will also affect the number of eligible buyers going into 2023. The Federal Reserve starts 2023 with its meeting on January 31st, and the next inflation report will post on February 14th, which is Valentine's Day, funnily enough. Well, that wraps up December's market report. If there are certain stats you want to know about or want to see a specific topic covered, please do let me know. If you're curious about your property value and want a well-formulated evaluation, have questions related to buying, or just have any questions in general, please don't hesitate to contact me. If you have any feedback, that is also welcome as well.